Stovekraft, as I said, is the stock on our radar. Weak set of revenues on the back of a delayed festive season. The profit was affected by high finance costs, but the company witnessed some margin expansion year on year, which was a good thing. Rajendra Gandhi, the MD of Stovekraft, joins us now to talk about that. Mr. Gandhi, thanks a lot for joining in. You know, you have seen a sequential recovery, although year on year there was a bit of, pressure. But just tell us, how is the demand situation now, and the festive season, how has it panned out so far? Have you seen festive buying pick up?
Good afternoon. The festive season is also, our business is also influenced by the festive season. And this year, Diwali being in the third quarter, in the middle of third quarter, so some sale has moved by a month. While the demand is good, is not a very high demand situation, but is not a very bad situation. We are seeing good growth.
Could you quantify the growth, Mr. Gandhi? The first half of this year, your revenues have been absolutely flat, and your growth generally has been coming down over the last few years. FY22, your year-on-year growth was 32%. Last year was 13%. Now the first half is absolutely flat. What do you expect for this entire year in terms of growth?
For the entire year, we believe that we will grow in the lines that we have been discussing. If the current situation continues, we still will continue. We'll be able to grow at double digits. But if the demand improves, we will be back to our historical growth.
Quantify that double digits?
So if the current sluggish demand continues, then we'll still be able to grow in the closer to 10-12%. And then if demand improves, because we are seeing good demand, there is an improvement in demand compared to the last quarter. Is also driven by Diwali getting into the middle of this quarter. So actually, if you will have to compare the growth, you'll have to club these two quarters, the second and third quarters, and then I think we will see good growth.
Okay, so the lower end of your guidance is 10 to 12%. Is that correct?
Yeah.
Okay. All right.
Okay. So can you tell us, in terms of just trying to understand the premium or the high ticket price category, what kind of growth are you seeing? How much does the premium category contribute to your business right now? Because, someone was making the point earlier on our show that this festive season, one stark revelation is that the premium end of the market is doing very well, although the lower end is struggling. Is that something that you notice as well? And can you tell us what is the contribution to your business from the premium end?
So for us, we are entering into various new categories of appliances, and we are seeing higher growth in this category versus the traditional categories of cooktops and cookware. The appliances category continues to grow both on YOY and quarter on quarter for us. Is driven by new offerings that are coming. All those products that we are getting into manufacturing them domestically within our facilities, we are seeing very high growth and getting to leadership. One of the category for us that has done very well and is continuing to grow is the air fryer. And we are launching similar kind of categories which are considered premium categories.
All right, air fryers, everyone wanting to be healthy while still enjoy the crunch of fried something.
I've used air fryers so much over the last many years. I'm just hoping that it's as healthy as they
time for a replacement of your air fryer. But Mr. Gandhi, you say that appliances will lead the growth, and we've seen that in your contribution as well. It's reduced from 25% to 23% for the pressure cooker business, while everyone else has seen an increase, including the likes of mixers, induction, non-stick too. But what we haven't seen is an improvement in your margins. Your margins a couple of years ago were in low teens, 13.5%, came down to sub 9%, sub 8% in FY23. With appliances moving higher, one would assume that margins would improve as well, right? Would you see double-digit margins in this year?
So it's also driven by the increase in the top-line revenue. It has that is taking place. Our gross margins have improved. We are improving from the previous year. Our gross margins have improved in the current year, both in the first and the second quarter. We are inching upwards of 35% on the gross margins. Of course, there is a lot of new development that has gone into the company. That is, we have invested in several facilities and also on our people. So there are increase in some costs. So overall, the margins will come back to those numbers that you have mentioned. Now we are targeting to even this year getting back to that 11% margin. And as we move and as these higher value products start contributing, I'm sure we'll be there.
What is your target for opening stores in the rest of the fiscal? You've opened 25 in Q2. You have 106 operational in 5 states in South India.
Yeah, currently the number, at the end of the quarter was 109. We opened 29 stores in the last quarter. We have just started signing up some stores in the Delhi NCR region. In the coming quarter, you will see stores coming up both in the west and the north.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Stovekraft. 10 to 12% revenue growth is what they're anticipating in case it is a sluggish festive season. And in terms of, let's see what they do if in case there is a pickup in terms of demand. We'll take a short break. On the other side, we'll get you more on the markets, a lot of stocks in focus, more of that on the other side. Stay tuned.